Bill Ackman made a very smart move last quarter. He bought Google shares after losing big on Netflix and he was rewarded handsomely. In this video, we will explore his Google investment and what I think about the company. I also invested in Google when it was trading around $90 and sold it near $110 to buy more research. I am still very bullish on Google and I will share my reasons of why. We will also take a look at Bill Ackman's portfolio overall and then I will show a couple of my favorite super investors like Mohnish Pabrai and Spier are doing with their money now that the 13F season is over. According to his latest 13F filing, Bill Ackman's hedge fund revealed a new stake in Google. He bought more than 10 million shares worth over $1 billion. Bill Ackman, unlike many other super investors, runs a very concentrated portfolio where his top 3 holdings, Lowe's, Chipotle and restaurant brands, make up 52% of his portfolio. And his investment in Google is now combined 10% between the two tickers. Of course, that is among the US holdings. According to Google, their assets under management is around $18 billion and around 10 billion of it is in US stocks. Lately, you might have heard Ackman's name with Netflix, where he bought the stock after its initial decline, where it went from almost $700 to mid $300 early 2022. But after his initial purchase, he has closed the position the very next quarter, where Netflix had another huge fall down and went down more, to less than $200, which meant more than 70% decline from the initial $700 range. That was quite right. Netflix, after that, recovered and made Ackman's trades look even worse. There was a recent interview with Bill Ackman from the Markets Insider, and I will leave a link in the description if you want to read more of it. In the interview, he said that after Netflix announced they will have a basic plan with ads, they were no longer confident in estimating Netflix's future cash flows, so it was economically rational thing to sell it. Another important thing for Ackman in the last year was their interest rate hedges. They made a lot of money from that. Ackman is actually pretty good at macro events. He even had a 100x from his shorts in 2020, and the funny thing is, he actually went on TV back then and said hell is coming while he was short on the market. Now, let's focus back on Google. In the first quarter this year, when Ackman invested in, Google was actually down more than 40% from its previous highs. Now, before we get deeper into Google, let's watch this video from Charlie Munger back in the 2019 meeting, where he talked about Google in an answer.
Warren and I are a little older than some people, and
damn near everybody.
and we're not the most flexible, probably in the whole world. And of course, if something as extreme as this internet development happens and you don't catch it, why, other people are going to blow by you. And I don't mind not having caught Amazon early. The guy is kind of a miracle worker. It's very peculiar. I give myself a pass on that. But I feel like a horse's ass for not identifying Google better. I think Warren feels the same way.
Yeah.
We screwed up.
He's saying we blew it. And we did have some insights into that because we were using them at Geico and we were seeing the results produced and we saw that we were paying $10 a click or whatever it might have been for something that had a marginal cost of them of exactly zero. And we saw it was working for us. So
we can see in our own operations how well that Google advertising was working. And we just sat there sucking our thumbs.
Right.
So we're ashamed. We atone. We're trying to atone. Maybe Apple was atonement.
When he says sucking our thumbs, I'm just glad he didn't use some other example.
I believe Munger had previously said that Google's moat was the widest he had ever seen. So when a company like that goes on a 40% sale, my interest levels suddenly go way up. Google is one of the most interesting companies out there. They are battling with Microsoft and OpenAI collaboration to be the best AI company. And it's not just Bard against Bing or ChatGPT. They are working on lots of other things, including text-to-image and even text-to-video, which is pretty interesting. Also, they are implementing AI more into cloud and workspace as the time goes on. Google might have the best balance sheet out there. And looking at their revenues and net income, their revenues grew around 10% year over year, but their net income fell around 16%. So their margins have shrunk. But let me remind you that GCP, the Google Cloud Platform, is still operating at a loss. GCP's revenue has doubled in the last 2 years, and their margins are going in the right direction while still being negative. And their competitors, Azure and Amazon Web Services, both have net margins of around 30%. So GCP not having that actually creates a $10 billion swing in their bottom line mine according to my calculations. Google had $67 billion free cash flow in 2021 and $60 billion in 2022. No matter how you look at it, they are crushing it on all cylinders. So at $90 range, their market cap was $1.14 trillion. Their price to free cash flow using $60 billion as their free cash flow was 19. So their free cash flow yield was a little over 5%. But of course, you might say they also had $19 billion as stock-based compensation, which I totally agree that it's a lot, and they definitely should bring the headcount down like Zuckerberg did with Meta. But even accounted for their SBC, their yield would be 3.6%. But when I look at the state of the company, going forward, I would expect their stock-based comp to go down or stay stagnant for the next few years, and their free cash flow to increase. Now, these are my bullish theses for Google. I can't say for a fact that these are the exact reasons Ackman bought in, but I would assume there are lots of overlap. I personally started buying Google when I saw it hit $105 range. I built up around 15% allocation with Google while continuously averaging down. My lowest buy was at $83.64. I closed my position on an average price around $105, which was my initial entry point, but it wasn't because I didn't like Google at those prices. I certainly did. However, I thought that the upside for me with Research was so much more than it was with Google, so I decided to relocate the capital with Research. I did the same with Amazon and Meta. Actually, Research is now making up almost 70% of my portfolio. And that decision paid me nicely. Now, other than the interest rate bet and the Google investment, if you look at Bill Ackman's portfolio, as I said before, it is very concentrated. His top position is Lowe's with almost 20% allocation. He initially bought a huge stake in 2018. Then, he bought some more during the 2020 crash. I would assume his average cost is around $90 range. And the stock is now sitting at a little over $200. That's more than a 130% gain in 5 short years, and that is excluding the dividends. And Lowe's is actually a dividend aristocrat, and I would assume his yield on cost is over 4%, so that has been an incredible investment for him. His second biggest holding is Chipotle with a 17% allocation. He invested in Chipotle in 2016 after the company had a health crisis, and it was an incredible time to invest in Chipotle. The stock price was around $400 when Ackman invested in, and now it is over $2,000, and that means 5 times your money in just 7 short years. His third company is QSR, the Restaurant Brands International. They own Burger King, Popeyes, Tim Hortons, and so forth. Ackman invested in the most volatile times in 2020 crash. He could have paid anywhere between $38 to $58. So, assuming a $45 average cost, he is now up more than 70% in 3 years, which is incredibly good, and that is also excluding dividends. QSR is another dividend stock with a current yield of almost 3%. Ackman's yield on cost would be closer to 5%, which is pretty nice. His other companies are Hilton Hotels with 12% allocation, Howard Hughes, which is a REIT by the way, with another 12% allocation again, and Canadian Pacific, the railroad company, with 11.5% allocation, and then obviously Google with around 10% combined in the two tickers. In the end, I can't really say that I personally like Bill Ackman a lot, but I really like his investment style. He identifies companies with durable and deep moats, and when markets hate them, it might be Chipotle's health concerns or ChatGPT fear with Google, he swings hard and then holds on to those companies. Also, he is really talented investing in restaurants, which I admire because restaurants are almost completely out of my circle of competence. I owned Starbucks for a while, but then I sold out because my conviction with them in the long run was very weak. Not that I thought they would do bad, I just simply couldn't feel safe with their moat. And before closing, let's look at some of my favorite investors' 13Fs. We already covered Bill Ackman. Looking at Buffett, he didn't do much. He bought some Apple, Bank of America, sold some Chevron, and bought more Occidental, and he increased HP by 15%. I covered HP and Occidental in my channel before, and I definitely suggest checking them out if you haven't yet. Lowe trimmed Micron by 40% and bought more Bank of America like Warren Buffett. Michael Burry is always a treat to follow. He increased JD and Alibaba. They now make up 20% of the portfolio, assuming he hasn't sold any, and he bought lots of other things. I'm not gonna actually name them. You can stop the video and check it out. But I would suggest to be very, very careful cloning Michael Burry, because by the time we hear about the companies he has invested in, he might actually have sold out. Looking at Terry Smith, he didn't do much. He trimmed IDEX and Estee Lauder a little, and I am very curious what he will do with Estee Lauder in the coming months. Mohnish Pabrai also trimmed some Micron, and he looks to be out of BAM, and that probably went in BN. Also, for some reason, he still has a very little Heritage in there as well. Finally, guy Spier literally didn't do anything. As Munger would say, he sat on his ass, which is my favorite way of investing. So that was it for today. I hope you liked it. If you did, please leave a like, comment, and subscribe. Other than that, I'll see you in the next one.